Welcome to 3 Daily News. The 2025 nickel tariff war has erupted into one of the fiercest trade battles between Washington and Ottawa in modern history. A sweeping 20 to 30% duty on EV metals, especially nickel, sent shockwaves through North America's battery belt, shaking supply chains and inflating costs at a pace no one saw coming. Suddenly, the dream of affordable electric vehicles slipped further out of reach. Canada, once the trusted and steady supplier across the border, didn't stay quiet. It struck back, redirecting exports toward Europe and Asia, while fueling its own industrial base with bold new investments. And now, with whispers of possible tariff exemptions circulating in political circles, the battlefield is shifting once again. Buckle up, because this story isn't just about trade, it's about the future of the electric revolution itself. These are the pivotal moves, the sharp counterpunches, and the deeper meaning of this high-stakes showdown. When tariffs strike the nickel artery, nickel has long been the hidden lifeblood of the electric vehicle industry. For decades, Canadian mines supplied a steady stream of the metal, flowing south into American factories. This quiet advantage powered the rise of the EV sector, allowing automakers to expand production without facing bottlenecks. By 2024, nearly $4 billion worth of Canadian nickel crossed the border annually. Every battery pack, from compact sedans to large SUVs, depended on this flow of raw material. But that advantage collapsed almost overnight. In August 2025, new tariffs of up to 30% didn't just target Asia. They hit Canada too. The math was brutal. Each advanced battery designed with nickel-rich chemistry requires around 38 kilograms of the metal, valued at about $775. With a 30% duty layered on top, the cost of each battery pack rose by nearly $250. That may sound small, but multiplied across tens of thousands of vehicles, it wiped out billions in margins. Automakers that once counted on thin but stable profits suddenly faced losses. And the pain wasn't just on balance sheets. Analysts quickly projected nearly 100,000 fewer EV sales in 2026 as prices climbed beyond what middle-class households could afford. Trucks and SUVs, once positioned as attainable electrics, suddenly cost several $1,000s more. Shoppers began turning back to gasoline models, not out of preference, but necessity. What was meant to protect American jobs ended up cutting into sales, shrinking profit margins, and raising new doubts about whether North America's EV transition could stay on track. Canada's precision counterstrike. Canada didn't wait long to respond. Rather than speeches and rhetoric, policymakers turned immediately to action, introducing measures designed to defend their industries and reorient trade. In July 2025, 4 decisive steps reshaped the battlefield: a 15% export tax on raw nickel. For decades, Canadian nickel had entered U.S. factories duty-free. That era ended instantly, tightening supply and raising costs. Carbon tracking for exports. Canada introduced a system that gave preference to its hydro-powered green nickel, while rerouting dirtier production toward other buyers. U.S. firms had to decide: pay more for clean supply or lose access altogether. A $250 million national fund. This investment boosted domestic production of nickel-free battery alternatives, reducing long-term dependence on a single resource. Generous tax incentives. These incentives anchored new gigafactory projects at home, locking in thousands of future jobs within Canadian borders. By the end of July, the results were already visible. Projections showed nearly $2 billion in trade flows redirected towards South Korea and Europe by 2027. But Canada wasn't done yet. A massive Buy Canadian initiative required domestic sourcing of key industrial materials like steel, aluminum, and nickel. Exports to Asia and Europe surged, while America's share of the Canadian supply chain steadily shrank. This wasn't just retaliation, it was strategy. Canada wasn't simply fighting back, it was diversifying its markets, modernizing its industries, and turning Washington's tariffs into leverage for its own growth. Global carbon penalties on the horizon. And just as both sides locked horns, a new challenge loomed, one that could overshadow tariffs' entirely: carbon costs. In 2026, the European Union is set to roll out the Carbon Border Adjustment Mechanism, a sweeping measure that will place a fee of about €115 per ton of carbon dioxide embedded in imports. For industries dependent on energy-intensive metals like nickel, this is no small matter. It means exporters will need to prove their products are green, or pay heavily at the border. For Canada, this is both risk and opportunity. Its clean, hydropowered nickel could become more attractive to Europe, while dirtier competitors might be squeezed out of the market. For the US, it adds yet another layer of cost pressure at a time when EV adoption is already under strain. The message is clear. This is no longer just a trade fight. It's part of a broader shift where climate rules, carbon accounting, and industrial strategy collide on a global scale. The nickel tariff war is more than a dispute over duties. It's a glimpse into the future of resource battles, where economic security, industrial independence, and climate responsibility are all at stake. For North America, the road ahead will be defined not just by who builds the cheapest battery, but by who controls the cleanest, most reliable supply chains in a carbon-conscious world. For U.S. automakers sourcing nickel from Indonesia or the Philippines, the financial risks are enormous. The contrast in carbon footprints tells the story. Ontario's hydro-refined nickel produces just 4.2 tons of CO2 per ton of metal. By comparison, Indonesian laterite nickel emits a staggering 36 tons, almost 9 times dirtier. Chinese output averages around 18 tons. Now imagine the implications. Every electric vehicle built with dirty nickel could accumulate hundreds of dollars in carbon penalties when shipped to Europe. That's a devastating blow for manufacturers already operating on razor-thin profit margins. Europe, one of the fastest-growing EV markets on the planet, suddenly looks like it could slip from America's grasp. Canada, meanwhile, is seizing the moment. Deals with Germany and South Korea are already in place, guaranteeing long-term shipments of green nickel that remain untouched by Europe's carbon charges. Layer on Russia's war in Ukraine, Indonesia's environmental baggage, and China's refining dominance, and Washington's tariffs start to look less like a defense strategy and more like a diplomatic misstep. The U.S. risks either higher costs at home or crippling penalties abroad, while Canada plays the smarter, cleaner hand. Tariff turns exemptions on the horizon, but just as the walls began to close in, a sudden twist offered a possible way out. On September 5, 2025, the U.S. administration signed an executive order allowing tariff exemptions for aligned partners under reciprocal trade agreements. Nickel made the list, but Canada, despite being America's second-largest trading partner, wasn't guaranteed a spot. Ottawa moved quickly. Within days, Canada suspended its 20% EV sales mandate for 2026 to ease pressure on automakers, while simultaneously launching a $5 billion national fund to shield its industries from the impact of U.S. tariffs. It was a calculated move, a signal of flexibility, but also a reminder that Canada would not sacrifice its long-term interests. With more than 85% of bilateral trade already tariff-free under USMCA, nickel could soon regain its status as a lifeline resource. Yet uncertainty still clouds the horizon. Analysts currently peg the odds of a deal at 60%, with Wall Street betting on either full exemptions or a blended tariff rate of 20 to 25%. In anticipation, American automakers have already trimmed their 2026 electric vehicle production targets, signaling billions in potential losses. What began as a heated confrontation is now sliding into delicate negotiation. But time is short. Factories cannot afford to sit idle, and the global supply race won't pause for politics. That leaves a much bigger question. Who really controls nickel's future? The nickel endgame. Who holds the winning hand? Nickel is no longer just another industrial metal. It has become a geopolitical chess piece. And right now, it's Canada, not Washington, that sits at the center of the board. New contracts with Seoul and Hamburg have diversified Ottawa's buyers. Europe, hungry for clean and traceable supply, is embracing Ontario's low-carbon nickel with enthusiasm. South Korea has already boosted its imports by nearly 20% since spring. Canada isn't waiting for U.S. approval, it's already moving forward, securing its role in the global supply chain of the future. The stakes are enormous. At $20,000 per ton, nickel is lightweight, highly valuable, and indispensable not just for electric vehicles, but also for aerospace and defense. Canada understands this leverage. If the U.S. hesitates, Europe and Asia will gladly step in. For Washington, losing access to a secure North American supply in favor of unstable Russian or environmentally damaging Indonesian sources is more than an economic problem. It's a strategic liability. Even defense contractors are sounding alarms. Nickel-heavy jet engines, naval vessels, and military equipment all depend on a stable flow of the metal. Losing reliable access doesn't just hurt car makers, it threatens national security. Meanwhile, rising EV prices risk transforming electrification from a mass-market transition into a luxury project for the wealthy. What was once meant to be a widespread, affordable shift toward cleaner transportation could easily stall, leaving millions priced out of the future. And so, the nickel war has become more than a trade fight. It's about industrial power, climate leadership, and global strategy. The real question isn't just who will win today's tariff battle, it's who will control the arteries of tomorrow's green economy. Canada has successfully safeguarded its position as the green supplier of choice, while the United States risks losing both competitiveness and confidence. And that brings us to the final verdict. The nickel gambit. Canada advances, the US at a crossroads. What began as a tariff designed to protect American jobs has instead backfired, ricocheting through Detroit and beyond. Costs have climbed, EV sales have been threatened, and the very supply chain meant to be secured has become more fragile. Canada, on the other hand, didn't fold. It doubled down, diversifying exports, investing heavily in cleaner technologies, and wielding nickel as both a shield and a sword. By securing long-term buyers in Europe and Asia, Ottawa has transformed its resource base into strategic leverage. Now exemptions are on the table, and the US faces a pivotal choice. Partner with its closest ally to stabilize the EV supply chain, restore affordability, and maintain competitiveness. Or cling to protectionism, risk further isolation, and watch Europe and Asia seize the future of green industries. The nickel gambit proves one thing beyond doubt. Resources buried deep underground now shape the destiny of industries, alliances, and climate goals. The road forward is still open, but only if Washington remembers a fundamental truth. Allies don't belong on the enemy list. Your turn. So now we want to hear from you. Do you think Washington will grant Canada the tariff exemptions, or will this standoff drag on longer? Has this trade war changed how you view the affordability and future of EVs in America? With Europe and Asia racing ahead, can the US still claim leadership in the global EV transition? Drop your thoughts in the comments below. Your perspective matters, and we'd love to hear it. Before we shift into neutral, don't forget to subscribe to 3 Daily News, so you'll never miss the latest updates on global trade, energy, and technology. Thanks for watching, and we'll see you in the next one. You can now check out any of the videos on screen. There's plenty more to explore.